Hi, welcome to the Keiser Report. I'm Max Keiser.
I'm Stacy Herbert.
So, talk to me. We got something happening out there in the Twitterosphere, Stacy Herbert.
Max, you're a fragger.
What?
Well, according to the BBC's Paul Mason, on his tweet, he says, hashtag Greek details. People switch off TV because too depressing. Get news from ... Max Keiser and Perez Hilton. Also specialist websites, Cultural Frag.
Yeah, it's cultural fragging. You know, what we do to the truth is we do some nasty bits to it. You know, we don't take any prisoners. Let's see if I can actually fire at you right there in the airport. Oh, that must have hurt. Yeah, Twitter is becoming huge. And when I get to 20,000 followers, whoever is my 20,000th follower, I'm going to send him a 1-ounce silver bullion coin.
Let's go back to this tweet. His name is Paul Mason. He's from the BBC, and he's saying the Greek people don't go to the news. They go to Max Keiser. So Max Keiser is officially what Jon Stewart is to the domestic U.S. audience, Max Keiser is to the global audience. Not because we report on the grenades that have already blown up. We report before they blow up. Paul Mason famously went to Reykjavik a few years after we went there and warned the Icelandic people that that country would blow up. I want to show another flashback here. Max, we're going to flash back.
Whoa!
This is Max Keiser from 2007.
Well, I think what people are starting to realize is that the banks are exposed to hundreds of billions, if not trillions of dollars worth of bad paper. And it's a little bit more than just a liquidity crisis. The banks themselves are not lending to each other. The overnight rate, interbank rate, is quite high. There's a freezing up, a seizure in the credit markets. These assets are being forced to be marked to market as opposed to marked to model. And what they find, as I said on your show last time, is that they're not holding 100 cents on the dollar. They're holding 0 cents on the dollar. So this is a catastrophe. This is a controlled demolition of the banking system. This is the banking system's 9/11, if you will. This is a controlled demolition of the global banking system, floor by floor by floor. And we're going to see an absolute banking catastrophe, and that's my best case scenario.
So Max, you saw that the global financial system, the banking system, would come down floor by floor by floor. And yet every single month, month by month, we're told by the IMF, the EU, the ECB, the Federal Reserve, the Bank of England, the Paul Masons of the world, that it's better now, it's all better now. Including this headline, Max, EU Competition Commissioner Joaquin Almunia warns that banks may need further bailouts. Yes, once again, apparently they took those stress tests in July, but things have changed since then. And because of the debt crisis, Joaquin says, the banks are now more indebted.
Well, it's the shadow banking system that counts. Back in 2007, the shadow banking system peaked at around $800, $900 trillion in derivatives. That's been falling ever since 2007. And to accommodate these off-balance sheet losses, central banks and investment banks have had to print up oodles and oodles of more money. But they're scared to death of the shadow banking system, so they don't circulate that money in terms of lending it out to get the economy started. They keep it on their books in case there's another frozen assets like we saw in 2008. Remember, the overnight commercial credit repo market froze, and corporations are frightened of this. They want cash on hand. How is that shadow banking system doing? Which is all I pointed out when I said that the banking system around the world would fall floor by floor by floor in a controlled demolition like Building 7 during the 9/11 incident, because the shadow banking system has to continue to collapse until it reaches equilibrium, but that won't be for another 400 or 500 trillion in fake toxic derivatives. So we're talking much more carnage to come. Central bankers, by not admitting this, either they're being duplicitous or stupid or both. And what's on your shirt? I've got the gun. What does it say?
It says, if by yes.
Woo! Baby!
Jeez,
That's what I'm talking about.
But let's go back to this, because here's this guy, Joaquin Almunia. He's the EU's competition commissioner. And he says, sadly, as the sovereign debt crisis worsens, more banks may need to be recapitalized. Now, Max, Why is the sovereign debt crisis worsening?
Remember Hank Paulson? He put a gun to Congress's head and said, either you take $750 billion worth of Wall Street's bad debts and put it on the Fed's balance sheet, or we're going to blow this economy up.
And once we recapitalize banks once again, what will happen?
More austerity measures.
The sovereign debt crisis will worsen.
Well,
so what
yes.
he's advocating is a spiraling. They're trying to flush us down the global toilet.
They are succeeding. The globe is being flushed down the global toilet. And this is what the people that occupy Wall Street in New York City don't quite get. They think it's something that has to do only on Wall Street. They don't see the global dimension to this, like we've been covering on this show for a long, long time.
But that's why we're cultural fragging here. In fact, you and I are financial and market fragging, because I'll give you the Urban Dictionary definition of fragging, by the way. To throw a grenade in your officer's bunker and obliterate your officer. From Vietnam War, it was known as to assassinate one's superior using a grenade, usually for convenience or spite. In this case, it's convenient that we frag them before they get us.
Well, friendly fire.
Kind of. No, because friendly fire could be like, oops, 30,000 feet up in the air, it's a drone, I accidentally killed my own side. This is, you take this grenade and you throw it at the guy across, at the superior across from you. You intentionally throw it at them.
Well, fragging, I mean, John Locke said it back in 1790, didn't he? He said, when the social contract is broken, the people must revolt. Who are they revolting against? Their own governments, whether it's in Greece, in Ireland, in America. America's asleep at the switch, man. You got to get this insurrection going.
So let's look at why it's important that we frag. Here's a headline from Greece. Papandreou convenes cabinet to speed cuts for aid.
Wow, this is like high-frequency austerity.
That's right. This is what we have warned about, that there's going to be a floor by floor, another layer of your economy taken every single time. Once they pass through one set of measures, as they did when we were there in May or June and the whole country was erupting, well, then they give you another layer.
Right, I mean, Papandreou's got a gun to his head. He's being held hostage by bankers, essentially. Like, why doesn't he just tell the people, help me, save me, I'm being held hostage by banking terrorists? And then the people could go save Papandreou, put him on an island somewhere and hide him from the bankers, because he's been co-opted, he's been corrupted, he's no good anymore. They need somebody in charge who's going to stand up to the terrorists that have seized Greece and are milking it for every penny they possibly can. This has been going on for several years now. It's quite obvious. Papandreou is simply fibbing.
I want to point to another story where you were talking about high-frequency austerity measures.
Yeah.
System handles market data in 600 nanoseconds. This is a new high-frequency trading firm, and we've talked about high-frequency trading, how it steps in front of orders from like pension funds and like scoops out all our wealth. Well, that's trading in microseconds. This is now trading in nanoseconds. This new company, Burstream, can process a new piece of data in 600 billionths of a second, regardless of how much data stock markets are producing. Right now, they're producing 6.1 million messages per second.
And they're just stealing that much faster. They're not adding liquidity. They're not making a market. They're looting. They're looting. They're stealing. They're looting. This is high-frequency looting. And Papandreou saying, oh, we got to speed up the austerity measures from the IMF. That's another form of high-frequency looting.
But as like you said, in the video I showed at the top of the show, people keep on saying it's a liquidity crisis, and it's always been an insolvency crisis. Everything is bankrupt because we have high-frequency trading more and more debt. Just because they hold on to it for now nanoseconds, it doesn't make it go away, but it does allow the fluff, the cotton candy derivatives economy to grow even faster and bigger and out of control.
Well, imagine this, Stacy Herbert. You got a liquor store, and the wholesaler arrives with a truck full of liquor, and they stock the shelves of the liquor store, and then people come and they steal the liquor, and then after that, some people go, they're regular customers looking to buy a bottle of liquor, it's all gone. This is what's going on in the banking system. The Federal Reserve System throws money at these banks, and then the insiders steal the bank, they loot the bank using high-frequency trading, they steal it, and then when people go to get money for a loan or something else of useful to do in the productive economy, there's no more money left, it's all gone. They're saying, no, we have to deal with austerity measures. It's just looting.
So William K. Black, who we've had on the show, wrote that the best way to rob a bank is to own a bank. So a lot of guys got into that business of owning banks so they could rob it. But then came along these high-frequency traders who looted those banks. So the best way to rob a bank is actually to loot the guys robbing the bank with your high-frequency trading algorithms.
It's a looting arms race. And the computer algorithmic traders who are using these black box trading mechanisms are scooping out billions and billions and impoverishing millions. And the policymakers call it making a market, but that is clearly not the case. They are looting. What don't you understand about that word? Looting is not just gangs in London stealing from the corner shop. If you were fair, you would give them banking licenses and have them work for you. But you're not fair. You're just condoning one form of looting and condemning a different form of looting.
Exactly. Those guys would do it for just a six-pack of bottled water, apparently.
Right. So the cost of looting would fall if you gave all those rioters in London access to this high-frequency trading. They'd loot for you for a lot less money.
Well, the article quotes Larry Tabb, making the jump from microseconds to nanoseconds will ratchet up the competition. Who is giving the profits over to these guys? When these high-frequency trading machines, algorithms, trade at nanoseconds, where do they scoop the profit from? Before, they were making $100 million a year for every increase in microseconds. Now they're trading at nanoseconds. So how much more per nanosecond are they taking, and who are they taking it from, Max?
They take it from the action on the exchanges. When you look in the paper and it says, oh, yesterday there were 2 billion shares traded on the New York Stock Exchange, every single one of those transactions included a looting procedure using high-frequency trading, as we've just described it. When they say, oh, the action on the bond market yesterday was 20 trillion on the Forex market, or there's $4 trillion per day in the Forex market. That's the foreign exchange market. That means that a $4 trillion per day action on that market, there is each and every one of those transactions includes a bit that goes to a looter vis-a-vis high-frequency trading.
And finally, Max, regarding this high-frequency trading now having broken the sound barrier, having broken now the speed of light, 22% of Americans want God's invisible hand to guide the economy. So according to a Baylor University study, 40.9% of Americans believe that God has a plan for me. Not for me, but for them. The study also found these people also tend to earn less money and have less education.
God has a plan for most Americans to work on a plantation, picking cotton and playing video games for companies like Zynga. That's God's plan for you.
Well, I think it's a sign of the financial propaganda, the likes that Paul Mason is unwittingly admitting to, that they operate on behalf of those guys like Lloyd Blankfein. They push Lloyd Blankfein of Goldman Sachs, his message out saying that bankers are doing God's work. They see we can go faster than the limits of God, the speed of light, the speed of sound. We can go faster.
Well, the markets ultimately will smite the high-frequency traders in the form of a global insurrection against banker occupation. Get your guillotine sharpened.
Or a global financial apocalypse.
Phantasmagorical. Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming your way, so stay right there. Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to London and speak with Ned Naylor-Leyland of Cheviot Asset Management. Ned, welcome back to the Keiser Report.
Hi Max, nice to be here.
Ned, old boy, we've invited you back on the Keiser Report to talk about the latest in the JP Morgan silver manipulation lawsuit and scandal. Tell us about the latest developments.
Well, look, I think it's a really interesting story, Max. I think it's probably worth just reminding ourselves of the timeline of this. Of course, we had March 2010, we had the CFTC hearing into silver manipulation. And as you well know, neither the regulator nor the accused have come up with anything in that time frame, which is pretty spectacular stuff in and of itself. But further to that, last year, I think it was September of last year, almost exactly a year ago, there was a class action lawsuit that was circulated naming JP Morgan and HSBC as the accused, but there wasn't much detail in that document. A lot of you had a look at it, but they weren't necessarily overly sort of impressed with the document. But what's obvious is that in that year that has passed since then, obviously these class action lawyers in New York have been working very hard on the detail and trying to flesh out the lawsuit and find out exactly how the manipulation worked and dig into all the detail of it. And then obviously on the 14th of this month, the first we heard was, I think it was Bloomberg, put out some news piece saying that HSBC had been dropped from the lawsuit. And I think that caught people's attention. They said, really, has this lawsuit changed? Has been amended? And then the lawsuit became available and people have had a look at it. And it's very clear that there's a lot of very interesting detail in there, which of course has been something which those people who haven't necessarily been long of the silver manipulation story have complained about. You know, where's the detail? Where's the beef here? And it appears that it's within this document.
Let's talk some of the details. Talk to me about spoof trades, 25 spoof trades listed in the suit. Who is Saxo Bank? Tell us about this.
The spoof trades are actually not the same as what you're referring to, which is fake trades. The Saxo Bank part of the story, as I read it, is that that platform is the place from which the people affecting the supposed manipulation, they were using this platform. Now, normally when you look at silver on a trading platform, the platforms are collated, or at least most of the time people look at collated pricing platforms. This Saxo Bank platform was not a collating platform, so the vast majority of people operating in the market wouldn't have seen these fake trades go through the system. It was only the people operating the Saxo Bank / JP Morgan / Deutsche Bank platform who would have seen these fake trades. Now, the way I read it is as follows. You know, you can imagine that maybe once in a very blue moon, a fake trade might be input into a trading system, and you know yourself how likely that would be. It's pretty unlikely. Now, what I would say is that the probability of this taking place repeatedly, you know, 25 times or more, the probability of that taking place on a regular basis and leading to the exact same price movement afterwards is pretty slim. To me, that seems quite incriminating.
Okay, let's get our terms straight here, because you're making a distinction between fake trading, spoof trading, and let me bring in another one here, quote stuffing. It sounds like quote stuffing and spoof trading, you're making an equivalency there. In other words, and we know this from the flash crash incidents on the various exchanges, what they find out is that computers will flash a price that they're willing to do a transaction at only so long as it creates an uptick or a downtick, and then they remove that order. They never put up any money, and therefore just manipulating the price without actually putting up any money. So this would be quote stuffing. So is this also then spoof trading?
Spoof trading and quote stuffing would be similar. The fake orders is a different thing altogether. But yeah, spoofing effectively is where you put a very large volume trade up with no intention of having it filled. It's a sort of form of bullying of the longs. So you stick on the screen what looks like a very large trade, which will frighten the longs out of their position, but with the intention of never actually having them filled. So yes, in a way, it's very similar to quote stuffing as you relate to. But the fake trades is more like the fake trade part of this story, as within the lawsuit. And obviously, you know, really, one does need to actually read this document to sort of follow the trail through. But that's actually more like just a signal of information. It's just a signal of this is where the market will be going, or this is where we'll be pulling our bids to over the next 12 to 24 hours, is the level at which the fake trade was marked. So it was like a little signal, a little email within that platform, but not available to other people, so that people could see that and go, so that's where we're trading.
So on the Saxo system, which is available to insiders, they're posting fake bids and offers as a way to telegraph where they plan to manipulate prices in the near future. This gives traders on the inside a way to front-run those trades and to profit from that insider information. And again, it's not about price
That's
discovery.
the accusation, absolutely. Yeah. And that's, of course, the core of the entire argument of the people who've looked into the subject over a long time frame.
Right. And now I was talking in the first half of the show about a new company that's very proud that they've introduced ways to trade on the exchanges in nanoseconds, a quantum leap more fast than microseconds. And they claim that they're, quote unquote, adding liquidity. But isn't it, in fact, they're just speeding up the rate at which they're looting?
Of course, and I can tell you from myself, operating within an wealth management firm, the dealers who do what I would call real investing, i.e. not running HFT programs or operating dark pools, people who are making real investments for real clients, they're just terrified because the volume in the real market has just dropped off completely, and the slack is just only being taken up by these HFT algos. The fact that they're now able to break the speed of light or whatever it is they're doing is just a frightening development in my opinion. I really find it amazing that there hasn't been any action on part of regulators, but I suppose in light of the other thing we're discussing, maybe it isn't that surprising.
All right, and Ned, let me go back here for a second, because you used a phrase, I want to talk about it. You used the phrase dark pool. Now, dark pool, you can also include in that phraseology the shadow banking system, something we talked about in the first half of the show. The shadow banking system, and this is not in debate, even Gordon Brown, former prime minister, referred to the shadow banking system as a problem within the banking system. This is where the traders and bankers have parked hundreds of trillions of dollars worth of toxic securities. Over the past 3 to 4 years, the shadow banking system has been crumbling, and as a result, the policymakers have been flooding the system with cash, but not at a rate commensurate with the rate at which the shadow banking system is collapsing. So this crisis continues. You've got this deflation or balance sheet recession going on because of the collapse that's really invisible because it's happening in the shadow banking system or in the dark pools, as you put it. At what point do the dark pools or the shadow banking system collapse down to a level where we've got some equilibrium? How many more trillions of toxic debts need to evaporate before we have any traction at all in this global economy?
I'm unsure of the answer, but what I would say is I think that a lot of this this problem plays into the overall debt burden that an economy can take, whether it be shadow or public. As for the shadow banking system, one thing we do know is we don't know, because it's all special purpose vehicles, off balance sheet, etc. And you and I are unlikely to find this out, I'm afraid, until after the event. But one thing I do keep an eye on personally, is I think it's interesting to see the guys who are more likely to know about this, so some of the top level politicians, certainly over here in the UK. And I've noticed that the finance, whether it be the coalition members or the opposition, they look genuinely rattled at the moment in a way which I haven't seen before. So that suggests to me that there's some data relating to the shadow banking system which is circulating amongst those guys, which doesn't look very, very pretty.
Let's go to some questions on Facebook, Ned. This is from Mark Betteridge. He asks, what will be the impact on the silver market if JP Morgan are found guilty of manipulating prices?
Relating to this particular lawsuit, possibly not what he would be expecting. And the reason for that is the fact that with a class action lawsuit, it's highly likely that they will settle, particularly as I believe the evidence is very strong from my reading of it. There will be gag orders on the people who effectively take a settlement. So the way the price will move higher is by the likes of you and I giving the oxygen of publicity to this document. Because in truth, you've got to bear in mind that it's key to the guys who are being accused that this document doesn't get the oxygen of publicity. That they will be relying on the idea that they can settle out of court with a gag order so that it can't be talked about, therefore it won't have the price ramifications that you and I would hope for, which is why I believe it's important to talk about it, potentially even maybe ask other guys involved in investigative journalism to have a look at this document, because it's reached a new stage now where there is meat on the bones for people to pick at. But of course, if the story starts to spread wildly and people start to become very interested, then clearly the price action is going to be geometric. I just slightly reluctant to be too overexcited about this lawsuit because of the way it's likely to roll out. The interesting thing will be, though, that if people become aware on some level that there have been settlements taking place, I'm fairly confident there are a lot of people who are not part of the existing class action lawsuit who will want to come in after this sort of first wave. So all of this is going to, one would hope, put the story on the front burner rather than the back burner. If it's on the front burner and people are talking about it, then you should anticipate short covering, and an effective short covering would lead to substantially higher prices. So I'm sorry for that slightly convoluted answer, but that would be my answer.
All right, so the bottom line is everybody around the world who is sick of being victimized by banking fraud, which includes all the biggest too big to fail banks around the world, has a moral obligation to buy silver. This is one of the rare instances in history where doing the right thing actually can make you rich at the expense of the bad guys. So this is a unique period, a unique time in history that people get really paid well to do the right thing. Well, Ned Naylor-Leyland, that's going to do it. That's all the time we have. But thanks again for being on the Keiser Report.
Not at all, Max.
All right, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Ned Naylor-Leyland of Cheviot Asset Management. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.